So as we just heard, the Trump administration's tariffs now face the U.S. Supreme Court. For more on what's at stake and its economic impact, we're joined today by Professor Kwak Jun-hee, Assistant Professor of Economics at Sogang University. Professor Kwak, thanks for joining us this morning.
Yeah, good morning. Thank you for having me.
So it could take weeks or even months until we get a final ruling. But what happens if the Supreme Court rules against the Trump administration? How might this affect South Korea and the global economy?
Right. So the case centers on whether the president can use the International Emergency Economic Powers Act, in short IEEPA, to impose broad tariffs without explicit congressional approval. And now it seems the U.S. Supreme Court is skeptical about this, but we don't know the decision yet. So first, if the court rules they are against the tariffs, I think this would be a major relief for the South Korean economy because as you know, for example, steel industry, we are facing like 50% of tariff. That's a great hit to the steel industry in Korea. And then with the lower tariffs, we expect our product can be more price competitive in the U.S. market. So we can boost our export after this decision. So I really hope the Supreme Court will have a very right decision. But if it has some court rules in favor of the tariffs, I think this would create significant trade policy uncertainty, and we will see much more muted trade across the world. And at the end, that will hit the Korean industries as well.
Right, we'll have to see until the final ruling comes out. But meanwhile, South Korea reached a trade deal with the United States while Donald Trump was in Gyeongju last week, and that includes a $200 billion cash investment in the United States in exchange for lower tariffs. Would you say this was a fair deal?
Yeah, first of all, the cash investment itself is, I think it's difficult to say it's a fair deal, but I can say it's now we have a better deal, okay, compared to the last one. The problem is, as you know, total amount of investment that will account for most of the foreign reserve in Korea, which poses a threat to stability in the Korean foreign exchange market. But now we have a better deal. So only $200 billion can be financed by cash. So it's much better than we should pay everything in cash. Moreover, now we can pay those $200 billion in 10 years separately. I think now that's doable. And moreover, I think it critically depends on details on the final agreement. For example, it matters how we are going to share the return from investment between the U.S. and Korea. And also, I think it's important to think about the total amount of expected return from the investment. If we have better scenario, I think it's not that it would be fair agreement, I guess. Yeah.
I see. But despite that trade deal, like you just earlier mentioned, there are concerns that the steel industry still face tariffs of 50%. What's your take on this? What should be done for Korean companies to, get more advantage when entering the U.S. market?
Yeah, so the trade deal negotiated during the APEC meeting in Gyeongju was a success for some sectors like automobiles, where tariffs were lowered from 25% to 15%. But the problem is this explicitly excludes the steel industry. So my take is that steel industry is facing a separate and more severe challenge. First of all, this tariff on steel industry depends on different legal basis. So it's based on the Section 232 of the Trade Expansion Act. And that's rationalized by the national security issue of the U.S. So I think it's a little bit more difficult to reach an agreement on this. Moreover, it's about U.S. politics. And the main reason why Trump administration imposes higher tariffs was to revive their manufacturing sector and create jobs for American people. And they also really want to protect their domestic steel industry, and that's vital for their Rust Belt political base. So thinking about their election, I think they are not likely to concede in this agreement with regard to the steel industry. So moreover, this 50% tariff on steel industry, if it's not lowered, then I think it has significant impacts because it can be also applied to, it is applied to over 400 derivative products like home appliances and transformers. And that will also hit not only POSCO or Hyundai Steel, but also the medium-sized Korean exporters. So we are in a very bad situation.
I see, that sounds pretty concerning. And as for the domestic economy, Korean stocks sharply fell after hitting multiple record highs in recent weeks, and this triggered a sidecar yesterday. For the first time in 7 months, the stocks went up again a little this morning, but what's behind the sudden decline?
Yeah, first of all, we know that there was a lot of concern about the AI bubbles in the US. So, for example, that there was an announcement of Palantir, that's US data analytics company, although they achieved very strong earnings, now we observe a decline in stock index, including Palantir and AI-related stocks. What we know as an economist is there is always an optimistic investors, and that derive stock booms, and that's what we have actually observed in early 2000 as well. There was an IT bubble. So, and moreover, we see that Michael Burry, who is the hedge fund manager, who also placed the put options on Palantir, and I think that created corrections. But what I want to say is it was predicted corrections. After persistent booms, it's inevitable to get some corrections. And after the significant rally, the institutional and foreign investors, they want to get some profits, okay? So I think I expect they will get some profits now, and maybe the stock will rebound again after this correction.
I see. We'll have to see how that goes. All right, Professor Kwak, thank you so much for your time and insight today. We appreciate it.
Yeah, thank you so much. Bye-bye.